should be already aware if you've already watched any or listened to any of the previous episodes, is that we're trying to find solutions, services, tools that will help anybody in the construction industry move forward with their business. There's a lot of common problems, and we're trying to address them to take them away so you can enjoy your business more. It can be more profitable. It can be more enjoyable, all of that sort of stuff. And so we're looking for people and services and information to be able to make your business better. Today, I am very excited, and I've been looking forward to this because Terry Tran, who I'm speaking to in today's episode, is a very, very good friend of mine, and I don't get to see the dude anywhere near as much as I would like. So, this is the closest to a get-together that we've had for a little while. So I'm looking forward to it. Now, Terry is one of those guys who I love to hang around because Terry makes me look smarter just because I know him. So I like to surround myself with people like Terry. And the exciting thing about this episode is it's super positive. We're not talking about problems. We're talking about opportunities. We're talking about money and freedom and all of these sorts of really, really cool things. So I'd like to welcome Mr. Terry Tran to the Tool Shed. How are you, Terry?
Very well, Mick, and thank you for having me here.
It's really, really good to talk to you. We don't talk nearly enough. We don't see each other nearly enough. And just a little bit of backstory. Terry and I met a number of years ago. We were both students of Taki Moores in the Black Belt business coaching space, and we sort of sat together at a table one day, and we've been mates ever since. And the really cool thing that I love about what Terry does is he has a process, a program, skills and knowledge that can help you use the profitability from your building business in a much, much better way. Instead of working for your money forever, learn how to get your money to work for you. And so this is exciting for me. Can you please start off by giving us a little bit of background, your story, how you ended up in this space, helping people use their money more effectively?
Yeah, sure, Mick. My background's always been in finance. So, I saw how I got into this was just seeing my mum as a single mum. We came as migrants into the country, and then obviously, luckily landed in Australia, and just saw how hard my mum had to work, doing 2 jobs just to make ends meet. And I just knew that from a very young age, there had to be a better way. And investing's always been in my field of, focus, that I always wanted to learn this. And over time, was a banker, also a financial planner, and then ended up in funds management. So also managing other people's money, setting up my own hedge fund. And now over the last 8 years now, been running a program where I actually teach people, because I've always wanted just not to help people, find fish and give them fish. In other words, manage their money, but also teach them a life skill that can indeed feed them for life. So teaching them how to fish, and therefore for themselves to manage their own money. And for some business owners who are, super busy, which have financial planners, brokers, etc., not a bad thing. But only thing is, I always just say that even if you do have a third party person running or helping you do that, it is still important that you do understand what they're doing, and at least having the basic knowledge of knowing what they're doing with your money. Because I always say that no one will ever care about your money more than you do. So very vital that you have that skill, and hence why I've ended up in this, and never thought about really teaching in terms of, running programs, etc. I just wanted to write a blog and help. But people ask me over the years, do I have a program? And finally, almost a decade ago, I started creating something, and here we are. Teaching well over 1,300 plus students now over the last 8 years. So it's been an incredible journey and a lot of fun as well.
Yeah. I don't mean to embarrass you here, but I'm just going to say what I'm going to say. You are one person that I have derived a lot of inspiration from. And the reason that I have done that was fundamentally your backstory. And if you're comfortable telling us the story of how you came to Australia, why you came to Australia. I'd love for you to do that. The reason being, I listen to lots of people talking about why they're not successful. And more often than not, they blame circumstances. They blame the environment. They haven't had this. They haven't had that opportunity. And to me, you are one person that is absolute proof that none of that stuff matters. Like, it's entirely up to you to decide what you want to do with what you've been dealt. So if you wouldn't mind, that I love this story.
Yeah, definitely. Thanks, Mick, for saying that and for your kind words. So my background is that I was I guess, a child of the Vietnam War. So back in the late 70s, when the communists finally took over, the Americans left, and they pretty much took everything. My father was, in fact, he owned a transport company. So he had a fleet of trucks delivering a lot of things like Coca-Cola, sugar, basic things to the markets. And then when the communists came, they pretty much took everything. And we knew we had to leave because we were basically going to be working for the communists for free and just being fed the very basics. So we sold everything or whatever we had, changed that into gold, and spent about a month just waiting by the beach, waiting for our ticket or the boat that would eventually take us away from Vietnam. So one night, after about a month and a half on a beach, just waiting for that boat ride, it finally came. And now, obviously, we've paid everything, and we're just hoping that the boat did actually come, and it did. So, thankfully, took that boat, and it was really not a boat that you would think that would take that many people. We had about 300 odd people on that boat. Only about 18 meters, though. That's the only issue. They really crowded a lot of people to, I guess, maximize their profits, so to speak. And because there were so many people, the boat actually never made it out into the South China Sea. For 3 days, we were running out of food and water, and just because of the weight of the boat, we started taking on board a lot of water, and we started to sink. And was very thankful that a oil rig off the coast of Malaysia that ended up seeing us, and then ultimately saving the boat from total sinking. And they took us on board. Spent 3 days, in fact, on the oil rig, according to my mum, and we were just waiting for the Malaysian government to finally take us on to their island. And they finally did. So ended up at the island, but it was, unlike, these days when you see sometimes on the news with a lot of migrants where they complain of conditions, etc. The conditions we had, we were literally on an island and spent there for 6 months. And the only cover we had was pretty much sleeping under trees. And they gave us, the Malaysian government did give us tarpans just to tie between the tree trunks, so to speak. And that was our shelter for 6 months. And we were lucky enough to have a lot of local fishermen that gave us their feed, whatever they had extra and they didn't sell, they would give us the feed from the catch. And that's how we spent the first 6 months. Unfortunately, though, even though my family or my mum and dad, we did make it to the island, I was 2 at the time. So one night, just Christmas Eve, they did have a bit of Christmas celebration, so to speak. Because we didn't have shoes, we decided not to go out. But then that evening, a storm hit, and it was so hard that one of the trees came down on our shelter. And while we were sleeping, that tree actually narrowly missed me and my mum, but ended up on top of my dad. So he passed away that night, and that left my mum, I guess, a 22-year-old widow at the time, and she had a 2-year-old, and plus, actually, in fact, also 2 teenage brothers that she had to look after now. And my father was really the man of the house, trying to make sure everything's okay. So that was my beginning, and waiting for any country literally to take us into their country. And thank God, the beautiful country of Australia, government plus the people accepted myself, my mum, and my 2 uncles into the country. And that's how we flew. Obviously got quarantined in Singapore, and then flew into the country and started our life back in the late 70s. In Australia. And that's how I, saw my mum then trying to make ends meet. We lived at the immigration center, learned English in the afternoon, and then would work at the factory in the morning, and then wash dishes at night at an Indian restaurant in Parramatta in Sydney. And and then of course, to feed the family here, but also send money back because we do come from quite a big family. And just the Asian tradition where they always send the eldest which my mum was, and my father was also on the other side. And there was basically another, the grandmother, grandfather, plus also another 6 more siblings in Vietnam that mouths to feed. So she'd do the 2 jobs to feed us, but also send money back to Vietnam. And then ultimately the one, I always call my mum the superwoman, that she'd, over time, over a decade, she saved enough money to actually immigrate the entire family across to Australia. So that was my journey and how I started my life in this country, but also seeing the incredible opportunities of what we have here versus what we have over there. And I always say, if you're lucky enough to be born here, there's no excuse to not make it, so to speak, because we've got everything we have. And if you come from somewhere like that and you go back to, which is why I love world travel so much, you see what other people have, or actually what other people don't have compared to what we have. We've just got so much. We are the lucky country, so to speak.
Yeah.
So definitely make the most out of what we have.
Yeah. And that's, again, what inspires me, what impresses me about you as a person is your constant positivity, being able to see opportunity where many people don't. And to me, that's inspiring. I think that also has a lot to do with how you do what you do as well. Like the attitude and the energy you bring to investing has to have an effect on what like the results you get. But I also see that your experience has sort of caused you to become this person that wants to help other people. And you are right up there with one of the most generous people, both, with your time and your knowledge that I know, so I'm absolutely privileged to be able to call you a friend. And as I said, I just love the opportunity to catch up with you, even though it's on a podcast interview, but we'll catch up in person in the not too distant future, hopefully.
Yeah. And Mick, what you just said was true, because one thing I forgot to mention is we were lucky enough to, the moment that my dad passed away, there was this very kind gentleman that didn't know us from a bar of soap, but she did see my mum's condition and where we were, and literally offered to arrange and pay for my father's funeral. And we always thought that he was a very wealthy businessman, so to speak. But in fact, he was just a local fisherman, owned a school canteen, and that was it. So we got help from, and seeing that the gratitude and seeing that help from a very young age, and that taught me that it's not what you have or how wealthy you need to be. It's what you're willing to basically help and pay it forward. And that's what I always try to do now these days.
Yeah, absolutely. And it's, I see it, I've known you for quite a while now, and I see it, and it's absolutely the truth. I would love to unpack the philosophy that you've developed in your investing. So I guess the best place to start is just tell us about Blueprint to start with, because you're like us. Like we have no imagination, do we? What's our entry-level program called? Let's call it Blueprint. So we've got a blueprint, you've got a blueprint, but it's like it's the entry into this where you're learning all of the fundamentals and building a foundation for I suppose financial intelligence and understanding the psychology of markets and things like that. And you've got a whole bunch of tools, but the thing that I really, really love about this is your philosophy about protecting your capital, and all of the fundamental philosophy that you use in your Blueprint program. So tell us about Blueprint, because it really is an amazing thing.
Yeah, so Blueprint was established because I just saw a lot of, a lot of BS teachings out there, which so much, a lot of these programs just focus on what they call trading, using stock charts, and ultimately that's the stock chart is just the end result, of what happens of a business, because people think about stocks as potentially just gambling or buying and selling based on those stock prices and stock charts and movements. But ultimately, a stock is it's a share of a real business, like our business, but it's just on a bigger scale, of course. And in the end, it is very important that you understand what you're buying, and that's what Blueprint is trying to teach you, is to have the philosophy of fundamental analysis, analyzing a company, utilizing this very similar numbers, the way we run our businesses, So fundamental analysis, understanding the business, and then at the same time also teaching people how to analyze the world, as in, are we in a recession? Are we going to another GFC? What is really happening? And when things are bad in the world, um, if you're fully exposed in the market, then what you said earlier about protecting your capital is number one priority. And if you know that something is bad is going to happen, and you can see the data telling you that, that's when we start pulling back, locking in the profits. Don't get greedy. Make sure you have a bunch of cash. And when the panic and the stock market decline or crash eventually happens, to fully take advantage of that, and that's where the biggest capital gains will actually in fact come by. And at the same time, also teaching. When you like something, it doesn't mean that you just go out there and buy it right away. It's also about valuation, knowing what you're buying, but also understanding that you're paying the right price and not overpaying for a share. Just like property investing, if you overpay, a house is worth $1 million, but you overpay for it and you pay, say, $2 million, you are eventually probably going to make money, but you've added so much more risk because you've overpaid. So a stock is no different. So it's just going through a process of a 6-week program where ultimately in the end, by the end of week 7, you're not only knowledgeable, but you're actually up and running, because I do share within Blueprint all the tools to set you up and systemize everything. So therefore, while everybody's still busy running their business, this shouldn't take more than 15 to 30 minutes a day at the most. So that on that average, using that average time frame, then it is worthwhile then, also taking charge of your finances and ensuring that you're building a portfolio outside your business to create off-business wealth as well.
Yeah. And that's what's exciting about this for me. Like in Black Belt, we're teaching our builders to implement profit first. So you actually do have profit. And then what do you do with it? Do you just sit it in a box under the bed, or, there's probably better ways of using it. The philosophy, the psychology of investing is really important as well. So I'd like you to speak on that. I just remember, and I know you've been to a Tony Robbins thing or two, but many, many moons ago we went to a Tony Robbins thing, and he was talking about the psychology, and he just had the guys that had quoits, the game of quoits that you throw those rope rings over a spike.
All right. Yes.
He had these guys with quoits on their arms. I thought, what the bloody hell's going on here? And he called them market makers. And he would talk over the microphone and he'd say, you can buy 2 quoits for $1. And people were just calmly walking around, waiting in line and waiting in turn to buy their quoits, because at the end of the game, you could have a throw over a spike and you would get some money back. So it was kind of like an investment, which is interesting in and of itself. You could either stand a metre away and you would get, so if you paid $1 and you got your quoits on, you would get an extra 40 cents back. You get $1.40.
Right.
But if you stood like 20 feet back and got both your quoits on, you would get $100. And most people would always stand right back and Hail Mary toss, whereas they didn't understand if they just dropped their quoits on, which you could from a metre, you just made a 40% gain on your investment, and they didn't get it. But the market makers, the thing that I found interesting was that they were all patient when they were $1 for a pair of quoits. And then they'd go up to $2, and then they went up to $5, and then they went up to $10, and eventually they were $50 and $100, and people had to use their own money to buy these quoits, and people lost their shit. Like people were pushing people out of the way. The higher the price went to buy these quoits, the more rude and focused, if you like, but desperate people were to buy. And then if they'd bought them high, and the price came down, they were doing stupid things to get rid of them. Like, just get this away from me.
Yeah.
Tell me about that psychology, because I couldn't believe a room of about 500 people that were seemingly intelligent behaved this way. What's that all about?
Yeah, it's hence why in Blueprint I actually focus on psychology first. So module 1 is literally all about psychology, because I know for a fact that if I don't get this right for people and teach them how to think, then no matter what system I ultimately give anybody, they'll never be able to follow it properly, and therefore will get greedy, like you say, or get fearful when in panic as well. So very important that you become contrarian thinkers, where Warren Buffett actually says, be greedy when others are fearful, and then fearful when others are greedy. So whenever the price of coins, whatever, start going up like crazy, you're actually far better standing back and just watching what people do. And then
Yep.
it's when people start, pushing around and, panicking and just trying to sell anything, then, that's the time that you actually come in. So as investors, in fact, that's what we should be doing. But the funny thing is, in the stock market and even sometimes the property market, it's the total opposite. But yet you see, I always compare it to, say, shopping, grocery shopping at Woolworths or Coles. Whenever things are on sale, they usually put things at the front of the store, right? And
Yep.
people, funny enough, they do this when they're shopping. When things are on sale, they'll go in and they'll load up. And when things are normal, you get to choose. Of course, if you need it, you'll still buy it at least at market price. But then when things are literally expensive, then maybe avoid that and then wait for the sale and then pop in and then buy it when it's on sale. So that's what we generally do when we're shopping. But we don't do that when we're investing in the stock market. We do the total opposite, which I find quite strange because that is in fact if you can have that contrarian thinking, that's what I call a positive edge or an advantage that we actually have. That if you can take advantage of that constantly and consistently, you're actually going to be very profitable over a long period of time. Sure, in the short term, you're not going to get much like that 40% return, which is in fact an incredible return. But people just don't see that. They want that gambling effect. They want to double their money. They want to triple their money in a short space of time. But people forget that compounding is one of the most powerful tool that we have, especially when we're still working, we've got time, and allow that next 5, 10, 15 years to compound that wealth. And every 3 or 4 years, you're doubling your money. You're going to do very well and become very wealthy. But while you're doing that, there is never a moment where you've got a sleepless night. You can actually still always sleep well at night as well while you're building that portfolio.
Yeah. I'm just thinking that that psychology thing you were talking about, is it the same thing as to why during COVID there was no toilet paper? Like, I don't know what people did with all the toilet paper, but it's like there isn't any. I need some.
Yes,
and there's fights in the car park about toilet paper.
Yeah, I think it's the fear of missing out, the FOMO effect. So that happens a lot in the investment markets. When you even go to auctions and you see people like potentially overbidding on a property as well, it's exactly the same thing. But this happens even more on the stock market because, at least in the property market, one thing that's probably stopping someone from totally overbidding is potentially how much they can get financed from their bank, and that's their limit. And if they can't borrow more, they just can't sign the dotted line on the contract. Whereas in the stock market, because there's nobody stopping them, they can actually totally outbid and outbid anybody in this auction arena. And then the bad thing is they don't even have a clue that they've totally outbid as well. So then they get caught, when the market downturns.
One of the things, I mean, a very common saying is, buy low, sell high. Right?
Yeah.
But I've heard you say you never ever try and sell at the peak at the top. Correct. And you never ever try and buy at the bottom. And I'm just wondering, like, how do we manage that psychology that it's almost like it's wired into us? We sell there, but then it just kept going up for a little bit before it turns, and there's that little bit that we missed out on. And instead of focusing on what we did do right, we get all bent out of shape about what we missed out on.
Yes. So I generally always say, once we sell out of something, the best thing to do is not look back and check, over the next couple of days, because that's the worst thing you can do. And at times you'll see, oh crap, you've sold out, and in fact actually goes up another 3, 4, 5%. But then if they consistently check in for, let's say, a week or two later, in fact, after a while, what ends up happening is that the stock actually plummets by 10 or 15%, but you never saw it because you only checked the next few days, and then you start feeling bad. So the moment you've sold, you let go, and then what we want to focus on is now doing the same thing, replicating that, and go for another investment opportunity. Because especially with the stock market, there's so many, I call them buses. If you miss one bus, you let it go, and if you've gone onto the right bus and you've hopped off the bus, just be happy that you've actually been able to hop off the right bus at the right time, made your profit basically, and then move on. And that's it. It's just that sort of getting in and getting out and cutting off that emotional roller coaster. And I think what it is if you've only got the 1 or 2 investments always going at the same time, and you've put a lot of money in it, then of course you're just focusing on that. Whether it goes good or bad, you're just checking on that. But if you've got a basket, a spread of like a fishing net, that you've got multiple opportunities, then it's probably easier to therefore, one, make the investment so you're not scared. But two, also when you sell out, you're fine because you're happy you've made your profit, and now you're just focusing on the other 10 or 15 investments that you've got in your portfolio anyway. So it's that sort of diversification that allows you to therefore do that.
Yeah. The amount of money you invest, what's your philosophy on because they say you shouldn't gamble what you can't afford to lose.
Yes.
This isn't about gambling at all. It's about being intelligent and making smart decisions. There is risk involved in everything, obviously, but this is considered choices based on a lot of information. But when somebody is investing, how do they start? Where do they start? And I would have seen people over the years who they see somebody else making some money in some sort of investment, and they will go and borrow money, hot tip to chuck on that horse or whatever it is to put in that investment. They lose it. What's the philosophy about where we get the money and how much of our money and which part of our money we should be able to invest confidently?
Okay, so first step is definitely be educated. Don't just go in there uneducated, because I even say that quote, Nick, where you mentioned about only invest what you can afford to lose. I in fact actually disagree with that, because I believe that initial seed capital is the capital that one had taken to save up, whether it took months, sometimes even years potentially. So you don't want to lose that. So it's vital that you don't lose that seed capital, because if you lose it, sure, it's something you could afford to lose, but then what ends up happening is it breaks your motivation, but also confidence of of doing another investment, so to speak. So it's actually vital that you don't lose what you bring to the market. In other words, be educated, and then once you start investing, you know what you're doing. And I always tell even people who come through our blueprint program, of course, I listen to how, I talk to them. They tell me how much they have to invest, etc. And generally, it's a lot of times it's in the 5 figures and 6 figure territory, etc. But I always tell them, even if you go through our program, you're very confident after the 6 weeks. I always say start with no more than 10 to 20,000. Not that you're going to lose it, because I know for a fact you won't lose it. In fact, because what we're investing in, they're not speculative mining stocks, companies or stocks that don't make money, that don't even churn out a profit in their company. So they're all very brand names, the Googles of the world, those type of, Apples, Microsofts, those companies anyway. So I always say start small, and then when you give yourself that 2 to 3 month period or time that you go through the process, understand what you're doing, potentially make silly mistakes, because we are human. And if you do make mistakes, just learn from them. And they're not financially crippling, because it's a small account. So learn from that. And then when you get confident and you see positive results, because I always say that when you make, especially with Blueprint, every 10 investments we make, we definitely don't get them all right. We generally have 8 or 9 that make money. 1 or 2 will not make money, and we've got to be okay with that. And when you see that happening time and time again, you will naturally be confident and then scale. Like any business, you got to make money, make sure that you're comfortable with what you're doing, and then scale. And I think that's the important thing, is not putting too much pressure in the initial months while you just learned and you're now in the market to sort of immediately make a massive return to potentially so that you can, create passive income to retire. That is not the game. It's just to get the confidence and then build upon that with that profit first model, where now once you're confident enough that things are working and you see the positive results, you will naturally just go profit first. Every month, quarter, you channel a percentage of what you're comfortable with into this account, and then you're compounding it from growth from the investment, but also compounding it from adding more funds to it. Yep. And in time, you're going to see a massive spike, a logarithmic growth, basically.
Yep. The exponential curve, as they call it.
Yes.
Not the asymptotic curve, which is the opposite of that. Did you know that? See, I told you no. I'm smarter just when I'm hanging around you. Is the thing. It's the opposite. So what was the first one I just mentioned?
I think it was asymmetric. Is
no, that one, the one that goes up.
The
No,
logarithmic is
that's
the
the
first.
curve, but it's
Yeah.
exponential was the word I was looking
Oh,
for.
exponential. Okay.
That's the one that goes up. The mirror image of that, for
Yeah.
those who want to be educated on this podcast, is called the asymptotic curve. So there you go. You've learned something.
There you go. See,
Um,
I'm smarter just hanging around you too, Mick.
there you go. Like we're an amazing team. Like, what can I say? Paper trading. I'd
Hmm.
like to hear your philosophy on paper trading, because
Okay.
I always thought that was a good thing, and then I kind of looked into it, and from a psychological perspective, maybe it's not such a good thing, because
Hmm.
I suspect that if it's on paper and you make a loss, there's somewhere deep inside where there's a bit of relief. Lucky I didn't do that. And if I paper traded and I on paper made a gain, but I didn't actually invest because it's paper trading,
Mm.
I think I just missed out. So I'm just wondering whether I'm actually creating links in my nervous system that are the exact opposite of what I should be feeling
Yeah.
if I'm actually trading live. So what are your thoughts on paper trading for practice?
Yeah. So paper trading, I recommend it for purely one thing, not to see results whether it's working or not, or the
Yeah,
system's working or not, and getting confidence, because it's what you just said. It's total reversal. So
yeah,
paper trading for me is just to get used to the platform. So in terms of buying and selling shares within that broking platform, because platforms we use, they're generally more focused towards the professional investor and trader, so they're not as colorful and beautiful on the website like many of the retail brokers out there. So paper trading for me is just purely just to get used to the platform and knowing
yeah,
how to buy and sell a share. The
yeah,
moment you know how to buy and sell a share, I think it's far better to then open a smaller account
yeah,
and have that in cash, whether it's 5,000, 10,000, and then have that account, and that's just sitting in cash anyway. It's going to take you months to even diversify and actually use that amount. It's not 5,000, you just buy one or two stocks. So by physically using a much smaller amount dollar wise, then because it's now real money, you are actually better off by doing so, because you're training yourself by
yeah,
understanding how you feel, about making the right decision, or potentially making mistakes with that actual money as well. And therefore, even on the paper trading, sometimes what people end up doing is that they get great results. So they think that in actual fact they can take that result and clone it over, bring it towards across to the real end. But the problem is, the moment you introduce real money on the line, your psychology actually immediately changes, because now it's the real deal. It's no longer something on Microsoft Excel that you've just imported the data and it's just you've made money, you've lost money. There's no emotional attachment. Whereas with real money, it's actually now there's emotional attachment. So
yeah,
you're better off just at least starting with a smaller account that you're comfortable with. And then by doing so, then you're able to then, like what I said earlier about scaling and just adding more to it over time, because then it's exactly the same feeling, because what we are doing is always using percentages and not the dollar amounts
yeah,
to signify whether something's working or not.
yeah. Um, I just recall first learning about how to look at the fundamentals and performances of different companies, and how to look it up with the tools that you gave us and taught us about,
Mm.
and having conversations with people that I guess didn't have the opportunity to understand this sort of stuff, and getting an understanding of how they made decisions as to what might be a good company or a good stock or whatever. And it really was,
Mm.
it might as well be gambling, because it's just, I think,
Yes.
one of my mates calls it the IR principle, I reckon.
I reckon. Yeah.
But having a look at companies, let's say, what was an example? It might have been Uber or companies like that, what you think is this massive thing that's billions of dollars, but then when you scratch the surface and look at its fundamentals,
Yeah.
it's a really a bad choice. Can you sort of take us through what you need to look for, and what you find that can be a bit of a surprise when you look at a big company like that you think should be successful or a good thing to invest in?
Yeah. So, the word, when you mentioned about Uber and companies like that, they look big because obviously a lot of people do use their services. But the issue is that the moment you peel back and just look at because it is a business, one very important number that you need to look at is straight away is, are they making money?
Mm.
And Uber for years has actually, to this date, it's pretty much not made any money. So what they've done is they've taken shareholders' funds through their initial public offering, basically the float, and they've just utilized that funds and then selling even more shares in the markets over time to fund this growth, so to speak, to hopefully dominate the market. But hope that one day they should finally turn a profit, and therefore the shareholders will be rewarded. So by doing things like that, you're actually gambling, hoping that whatever management says, I call it blue sky projections, that you hope that the management is right, because the moment that they're wrong, then that stock just plummets like pretty much just jumping off a cliff. So you want to avoid the companies like that. And then there's the others too, where numbers like return on the assets, when I say assets, if it's a factory, the machinery, etc., the return on assets needs to be a passable figure. I always have, say, 8% for return on assets, and then you've also got return on equity. Return on equity is basically the equity of shareholders' funds, which is assets minus liabilities. So things like that, they are very vital that they at least are firstly positive. If you look at the likes of Uber and a lot of these startup companies that look big, but when you look at their entire history from their existence, they're all actually all in the red. So they're not even positive. In fact, they're actually negative. So you want to avoid companies like that. And then, of course, there's other things like a net profit margin. Where every time you sell something, it doesn't actually make a profit. So I mean, Mick, we both run businesses. So, for example, let's say a builder that builds a house. Can you imagine selling as many houses as possible? So you look good because you become the biggest builder, but every single house, you're actually probably losing sometimes 10 to 20% on the build. And
that
how
happens.
long can you last? Yeah.
There's a lot of volume builders going under because of exactly what you just mentioned.
Yeah. So it's very dangerous that, and they, in the short term, they might look like, well, they're everywhere. They're building everywhere. But then how long can they last? That's the other thing, in time, if they're not getting more funding from the banks, from shareholders, eventually that business is going to collapse. And that's the share market. It's exactly the same deal. There's actually no difference.
Yep. I want you to just unpack some principles in your blueprint program, because I think it's very similar. Surprise, surprise, we've got a very similar model because we're all in the same coaching program. Yeah. We even call them the same things. But in our blueprint program, ours is 12 weeks, and it builds 3 super important foundational pillars that, since we've introduced it, when people then transition into black belt, we've noticed that their progress currently is around about 1,000% faster than what it used to be, how we used to do it. Like just working on everything all at once. Instead of that, we just work on these 3 things, get them right, then we'll work on the rest. It's made a massive difference. I believe that your blueprint builds that same foundation as well. So what can people expect to learn and understand by going through the blueprint that you've got?
Sure. So funny enough, it's exactly also the 3 foundational pillars as well. So what we have is we want to make sure that, firstly, we call it pre-vision, which is it's sort of an easier to understand term, pre-visioning, to know what the world is what's happening around the world, the bigger picture. In technical speak, it's macro analysis. So understanding where the world is right now and where it's actually going. So a lot of people, they see a market crash and they're scared of that, etc., or even a economic recession. What I want to say is that crashes and economic recessions do not happen overnight. It takes time to build in the background. And there's a lot of data that actually shows you when things are breaking. And when you see those data points breaking, then, they're the times that you should actually pull back. And no matter how good a company is, a stock that you're buying, when the tide goes down, it pulls down all, pretty much pulls down all boats, even if it's a super cruiser. So that's the first foundation, understanding where the world is, where it's actually going. Then the second pillar is then on the fundamental side of what we've been speaking about, of understanding what you're buying, all the different 10 criteria of even selecting the stock. And then, of course, the valuation, which I do through a number of videos, actually teach you how to value a stock. And therefore, going forward, you don't overpay. So that's the other part, fundamental analysis, which is vital in terms of choosing the right investment vehicle, so to speak. And then finally, even when we like something, then we go on to the what we call the when do you buy, when do you sell, in fancy speak, technical analysis. And that's what a lot of people focus on in a lot of other teachings. They focus on the charts. So that's the final, in fact, only the very final piece when the first two pieces are okay. And then you add on the final piece. And a lot of people also complicate this part because they look at, many people may have gone to, say, other seminars where they talk about all the different indicators, etc. Sometimes 10, 15 of them. But in actual fact, stock prices are like any commodity or, things that we buy and sell. It's basically prices are determined by demand and supply. And what creates that demand and supply are not investors like myself and you. We are very small players in the market. What ends up creating demand and supply are the big, what I call the fund managers, the big end of town, the super funds, pension funds. When these guys buy, they support the market and they push prices up. When they start selling, no matter how much we buy as individual investors, these guys are buying such a large volume or selling a large volume that if they're selling, the prices will come down. So we will basically jump on the bandwagon when we like a stock that they like. And then when we see them start getting off, we get off with them. So that's that third foundational piece as well. So when you add all three of these pieces together, it just makes sense. And hence why the very high success rate of every investment we buy, 8 to 9 out of 10 will make money. 1 or 2 still won't make money. And we just got to accept that fact. Mm-hmm. So it's those three pieces. And then on the other hand, what we have on Blueprint, we've got the inner circle side, which is now going on top on the foundational knowledge. And then I think this speeds up a lot of people's education, but also confidence, where they then see what I'm buying and selling, and not to blindly copy what I'm doing, but to see me and give them confidence that, they found the same stock because I've already taught them through Blueprint. But when they see on my reports that, I found, say, Microsoft, Terry's about to buy Microsoft. I was a bit nervous about buying it, but since Terry's buying it, I'll buy it with Terry. So we're buying it together. And then when we're selling it together. And that just gives another level of dimension of that confidence. It speeds up people's learning, but also in execution of not procrastinating, should I buy, shouldn't I buy? Those reports then help them take it to another level as well.
Yeah. I know that there is life after Blueprint as well. There's another group, yes, another community after Blueprint that I'll get you to talk about in a sec, but I just want to get your thoughts on community. I mean, I'm an absolute advocate of it. Yeah. In fact, I was talking to one of our black belt members today about the importance of community, and it is absolutely bizarre that, like, we went from one-on-one coaching to group coaching and built this community, and almost overnight, when we went from one-on-one to group, the speed at which our people were improving and growing their businesses was around 400% back in the day, like about 7 or 8 years ago. And I can tell you for sure and certain that I didn't become 4 times smarter overnight, because I didn't even know you at the time. So how could I have? So I didn't improve at all as a coach over that time. All we did was create a different environment that was focused on group or community, and it made a profound difference. What are your experiences? What are your thoughts on the value of a community, being part of a community that are focused on this, that are talking about the principles, that are sharing ideas and experiences? How valuable is that as part of a training or a program? How important is it to be part of a community within that?
Vital, because especially, with what a lot of our students all do, and in particular even the share market, you're pretty much in your room with a laptop or a computer screen, and you're buying or selling, and having that community allows you to therefore tap into, if you need help, you can ask for help in the community, and other people that have been around for a long time, or I call them veterans of Blueprint, they will, because I've helped them as well and they've succeeded, they will now pay it forward and also give back as well. And then a lot of times what I find is, sometimes when you're new to this, you don't even know what questions you want to ask. But then when somebody else asks that question, that was already probably sitting in your mind and you're about to ask it, but then now somebody else has asked it. Then you learn from that question as well. And you're learning from each other. And a lot of times I just find people sharing their results, and that just inspires others to go, if they can achieve that in this amount of time, I'm very certain I can do this as well. So it just inspires them to push forward. And sometimes, markets could be down, but to not be, you know, uh, pessimistic about it, because, inevitably things recover, and therefore having someone seeing their longer term results just pushes them forward to keep on going no matter what. So I think a community, a strong community, is actually vital, Mick.
Yeah. So Blueprint's entry level,
Hmm.
but investing becomes part of your life. It's
Yeah.
it's become part of the process of what you do on a daily, weekly, monthly basis.
Mm.
In your program, what's after Blueprint? What's it look like?
Yeah. So what we have is, after the 6 weeks, you're now investing, and then you're then invited to what we call inner circle. And inner circle is a more advanced level where now, okay, you've learned the basics. So I call it almost like you've gone to university, and now you're now in the apprenticeship, now investing in the markets, and now doing a master's degree of learning even more advanced concepts of taking
Mhm.
advantage of different market movements and different market types. But at the same time, also allow me to share with you transparently what I'm doing, like what I'm buying, what I'm selling, and even my own portfolio as well. So the reports are there, but I think the most valuable thing is jumping on every fortnight and giving people perspective of the big headlines that's in the markets or in the news, because many times people get scared about that. But of course, contrarian thinking, I try to break it down to, like, okay, there's this headline, this is the data that's showing what is really driving it. And should we be scared? And if we're not scared and there's really nothing wrong with it, how do we take advantage of the market panic or things that are happening? And a really good example recently, of course, is the recent US banking crisis that I know a lot of people have heard about. A couple of banking failures, regional banks in particular,
Yes.
and I was taught there's all the news that just scares the hell out of people. It's like, that's going to be another GFC. But in actual fact, we were far from it. All the data was showing that in actual fact, it was just a very contained event. And the
Mm.
Fed came out, the government, US government came out and even said that they're going to guarantee all deposits. So everything really, there's no major problem really, besides a couple of the banks. And yes, if you were a shareholder in that, hopefully you weren't. But if you were, if you were at least investing in the share market, those few banking failures really meant nothing overall to the portfolio. So what ended up happening was the panic then allowed a lot of stocks to, particularly the banking, but also many other industries like pharmaceuticals, things like that, and even the tech world, they all dropped dramatically. And now a lot of the stocks that were overvalued, now they're undervalued. And I just presented the facts and just said, guys, it's now time to go shopping. We were expecting something to go wrong because things were overvalued. We had 30 to 40% cash, and now all these opportunities come by. We got to take them. So we were just buying, I think, between 35 to 40 different company shares within that 3 week time frame. And I normally remember, Nick, how I said every 10 investments you make, if you get 8 to 9, you're doing very well. And by the time we exit out a month later of all those shares that we bought more as a shorter term trade, every single one, we had no losses in that whole
Mm.
month. So it's taking advantage of that. And that's what Inner Circle is about, being able to show them the facts behind that and alleviating a lot of the fears that some new investors may have when they come into the markets.
Yep. So, a couple of things here. I want to get the information from you. We're going to put it in the description, all that sort of stuff,
Sure.
as to how people want to contact you
Mm.
to find out more, get started, jump into Blueprint, all of that sort of thing.
Yep.
But I just want you to address the mindset about this, because
Mm.
like anything like this, it could be seen as a golden bullet, a Hail Mary pass, or whatever. What
Yep.
needs to be your mindset? What needs to be your situation before you reach out to Terry and say, open the door, I'm coming?
Right.
Where do
So
they need
first,
to be?
yeah. So firstly, it's definitely not a golden bullet. So a lot of people, they think that, they can come here and they can double their money, etc. It's definitely not the fact. It is a learn the thing and then learn all the skills, and then over time you'll be doubling your money, yes, but it will take you 3 4 years type thing. So that's the first thing. The second thing is the what you do need to have is, if you've got a ton of debt, credit card debt, stuff like that, and paying ridiculous 18 20% interest rates, those things need to go first before you even start investing. Because
Yeah.
if you're making 15 20% here, which is already a very good return per annum, but you're paying 20% over there. It's just a silly idea. So you're actually better off eradicating the debt, the high interest debt first. But of course, if you've got investment debt, investment properties, etc., that's okay. So you need to be financially sound there. And at the same time, I think it's also important that if you are a startup business and you're still struggling to make positive cash flow from the business itself, now may not be the time. It's actually better off because that's the cash cow that needs to bring in the capital, feed the family, put food on the table, relieve a lot of stress, and then you've got the surplus to then go profit first, and then now go into to start investing. So I think those three things are vital before you even think about the investment side. So stability first.
So what you're fundamentally saying is those people should come and see us first.
Correct. Yes, definitely. Yeah.
Let's get them to make the profit. Just for boasting purposes, and you might not have known this, but we last year, toward the end of last year, we had our first black belt member message me and say, and this was bizarre, like, because he messaged me privately because he didn't want to jump in the tool shed and sound like he was boasting, but he was our first black belt member to ever hit the $1 million cash in the profit account.
Wow, nice.
Which and like, imagine doing that and then going, I don't want to piss people off or sound like I'm boasting or anything like that. It's like, dude, we need to scream this from the rooftops because this is possible. Like, the guy didn't necessarily increase his revenue hardly at all, but went from struggling financially to $1 million cash in 2.5 years without increasing the revenue. So all of that sort of stuff's possible. But, once you got that some money in your profit account, we need to be jumping over and talking to people like Terry. So we do smart things with that money. Yeah. So what's the front door? Like, how do people listening to this get in contact with you and get more information or get started?
Yeah, I think the best way to go about is actually coming to our free masterclass first that we run weekly. And then that itself will allow you to know, actually, you'll get a lot of teachings. It runs for about 90 minutes, including Q&A will go for up to about 2 hours, depending how many questions. And generally, that session allows you to, one, learn a ton. What we've been speaking about tonight, the fundamental stock picking. I run it almost like a workshop. So it's not like a webinar. It's actually a proper masterclass workshop. And I teach you, but I also have you do things as well to get the learnings. And then you will then know whether it's the right thing for you, whether, do you want to do this? Is this something that you feel that may be something you want to learn, but also do going forward? And then once you have that, then if you feel it's the right thing, then we have a chat afterwards to see, how can we actually help you take it to another level.
Cool. Well, I'll make sure that the link to register for that weekly workshop is going to be in the description. So it's going to be easy to find. People can click on the link, register for that, and away we go. But just wanted to say it's been an absolute pleasure talking with you again. We don't do it enough. You need to get on a plane, get down here. We're going to go out boating, have a chat, go out to dinner, all of that sort of stuff.
Yes.
That we've really enjoyed in the past, but we just haven't done it. Like I guess since the whole COVID thing, like we just haven't reconnected physically since then. So we need to make that happen. Thanks for being on the podcast. Thanks for being so generous with your time and your knowledge. It's an absolute pleasure to have you on the podcast, and an absolute pleasure to know you. So thank you very much.
Very welcome, Nick, and always a pleasure to be on your channel and have a great chat with you anyway, as usual. So thanks, Mick.
So, folks, that's it for this episode of the Tool Shed podcast. Please reach out. We'll put a link in the description to jump on one of those weekly sessions with Terry. He is absolutely one of nature's gentlemen, one of the nicest guys, one of the most generous guys, one of the most inspirational people that you will meet. Good person to hang around, good person to have in your corner. So reach out, have a conversation, jump in that workshop. We'll be back again with another episode of the Tool Shed podcast before you know it. But I'm Mick Hawes from Builders Business Black Belt. This has been the Tool Shed podcast.